What's up, guys? Here we are, another Teach Me Tuesday. We back at you again, and we got a good topic for you today. We're gonna talk about your mortgage payment. What about the mortgage payment? What makes it? How can we get that mortgage payment lower? How can we make sure it's fixed so that it doesn't change from year to year? We're gonna deep dive into all that. We're gonna give you guys about a good 30 minutes of content. You got yours truly, Gavin Abraham, loan officer, New American Funding, here in the Charleston surrounding areas, all of South Carolina, Georgia. I'm happy to be here, and I have two lovely, wonderful people with me. Will you guys take some time to introduce yourselves right quick?
Yeah, so I am LaShawn Abraham. That was such a great introduction, Mr. Abraham.
I do
So
what I
I'm
do.
LaShawn Abraham. I would say the better half or the other half of this duo team that we have here, serving all of South Carolina and Georgia, as Gavin mentioned. And we're definitely excited about this topic of mortgage payment because we get asked a lot. People get sticker shock when they see it. So we also have with us one of our great, great, great real estate partners, Mr. Barry.
What's up, guys? Wilmot here with the Bear Group, brokered by EXP Realty, helping my clients reach their real estate goals. And I'm excited about this topic, guys. I have this conversation with my clients a lot, and I'm glad to have this conversation with some mortgage professionals so that make sure the information is accurate as possible. Okay, because I can give my 2 cents, but I always refer to my professional when it comes to that mortgage side. So yeah.
That's sweet. Good stuff, man. So again, we're all excited to drop these jewels on you guys, and we're gonna jump right in. So, LaShawn, Wilmot, mortgage payment. I'll tell you what. You know what? Let's start off with Mr. Berry. Let's start off by first, uh, Wilmot. Let's say you get a call um, from a client or whoever, someone's interested in buying,
Mm-hmm.
and I can definitely help you in your home search. You ask them have they been pre-approved. Yes, they may have, or no, they may haven't. Um, and but they tell you, you know what, Wilmot, though, right now I'm paying $500 in rent, and I really want my mortgage payment to be somewhere around that, or even lower. Wilmot, you know, you're not the lender, but you're a real estate agent. You know what homes are selling for. Help me. What's that conversation like
Mm-hmm.
when someone tells you, "Hey, I want a mortgage payment"? I'm gonna just jump out there and say under $1,000 right now.
Mm-hmm.
Um,
Mm-hmm.
how realistic is that, or have you seen? Do you see home prices that support a mortgage payment under $1,000 for your first time home buyer or your repeat buyer?
Well, let me say this too, Gavin. Man, one thing I am in the Orangeburg area, so I know I will say that my market, the price range is a whole lot better than your Charlestons, your Somervilles,
Mm-hmm.
even in your Columbias. So hey guys, if you're looking for a home and you need some affordable housing, hey, call me. I'll be more than happy to help. Because I will say that we do have homes in the $100,000 range, and even some, a very few, below 100. However, with those particular homes, and I always tell people this, it's a reason why sometimes those homes are priced that way. It's either the area might not be the best, or the house might not be the best as far as shape and condition. Okay, so when we talk about prices like that, but Gavin, one thing I thought about when you were talking, I was looking behind you at your picture. It says mindset is everything. I think one of the things we have to work on is the mindset of the buyer. Okay, because they're in the renter's mindset, we got to get them into a homeowner's mindset. Okay, because when you're paying that mortgage, you own that property.
Mm-hmm.
Okay, so I want them to understand that. So when they're making that monthly payment, not just paying, throwing it into the wind. No, 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 no. This is actually an investment you're making each and every month into your property. So,
Mm-hmm.
but Gavin, to get back to your question, I know that was a long answer to your
No,
question.
no, no, that's good
Um,
stuff.
I do feel like sometimes there is a what we say come to Jesus moment. When we have that conversation, just to kind of let them know It's like, hey, if you want your payment to be in that range, hey guys, we got to look at houses in this price range in order for that to happen. And then usually when I give them those particular homes, they might say, well, man, I might need to, work on some things or pick up my budget in order for me to purchase the home that's right for me. So
Right, right. And so, LaShawn, same scenario. I mean, client, we talk to clients every day, and we always are asking, because we want to make sure when we're pre-approving people, we're giving them, their max pre-approval, but we're also giving them options compared to
mm,
where they think they can budget for a monthly mortgage payment. So, LaShawn, what would you say typically, or what do you see that people say most often that may not be realistic? What price range would you say?
Yeah, I mean, when I first started off, I've been in the mortgage business now for almost 10 years. When I first started off, I feel like every couple years we kind of have like a stamped payment that's kind of etched in people's minds. At first, it used to be $800, then it kind of inched up to $1,000. But I would say, like today in 2024, the number I'm hearing most is between $1,300 and $1,500. Those are the two payments that a lot of people are like, hey, how do I keep my payment here? And so, Wilmot, you made a very, very good point, which is some of the things that we're going to talk about. Your geographical regional location kind of drives what that payment is also going to be, because house price plays such a crucial, critical role in your mortgage payment. I mean, if a person tells me that they want to buy a $500,000 house and they want a $1,300 to $1,500 payment, my first response is going to be, I'm sorry, sweetheart or sir. But that
mm,
is very unrealistic unless you're not going to be financing that much money. You can want to buy a house at that price, and financing it at that price is two different things.
mm,
But if a person tells me that I want $150,000 or $250,000 house, and I want my payment between 12 and 1,300, now I'm trying to say, okay, that conversation may be a little bit different, because we still need to go through the process of figuring out truly how much are you financing, where's that rate going to be, and other things and other factors that kind of play into that. But in general, based on just the way the market is, whether you're in a market where the house prices on average is lower, or you're in an area like we are where the prices are a lot more elevated, having $1,000 to a $1,300 mortgage payment is truly unrealistic. It's
mm,
not impossible. So unrealistic is not the same thing as impossible, but it's just unrealistic to have that expectation that that's where that payment is going to be. And so, you going to say something, Gavin?
Oh yeah, no, go ahead, finish your thought. I'll
And
jump
I
in.
was gonna say, so our goal today in this particular episode, we're going to truly break it all the way down to like really talk about, how do you get your mortgage payment lower, and what does your mortgage payment really consist of, to understand the factors that really control it. And so that way, as that home buyer, or either you as a seller who wants to buy their house and now move into something else, because a lot of times I have seen with sellers, especially if they bought many, many years ago, they didn't have this great $800 or $1,000 payment, and now they have to enter the market and pay a lot more. So
mm,
how do you set those expectations in your head to know how to plan strategically to try to see how can you get there? And so that's what we're really, really going to talk about today. And hopefully I'm gonna do a little demonstration if I can get it to work. I never tried this before on Teach Me Tuesday, but I'm gonna see if I can do it. So I'm gonna pull up our little handy dandy mortgage calculator so y'all can kind of see the numbers, because I feel the educator in me feels like I need to show people the numbers so people can realistically see this does not equal this, because I love math. Numbers are my thing.
mm,
So let's hop into it. So the first thing I would say, if you want to lower your mortgage payment, right? Let's talk about your down payment, because how much money you put down, once again, the house can cost 100, 200, 300, 400, $500,000, but are you necessarily trying to finance that amount as
mm,
well? Because
mm,
purchase price and loan amount are two separate things. And your loan amount is what controls your payment and not your purchase price. So let's talk about down payment. So what have you guys been seeing out there when it comes to down payment? Do people want to put down money? Or are they trying to keep all their money in their pocket? Or do you advise people to put money down? What do you think?
Yeah, I mean, well, first of all, typically we know that there are programs that don't require money down, such as VA and USDA, and then you
Do you
have.
advise that? Because I mean, I have a client right now that they can qualify for a VA loan. It has no down payment, right?
Mhm.
He wants to buy a $500,000 house. And so my question with him is that you're truly wanting to finance a $500,000, putting down zero. So
And,
when you are financing that much money, you're not putting down any down payment. What is the expectation of where that mortgage payment is going to be if you're financing that large of a loan for 30 years? Something to think about.
yeah. So I mean, but doing the, I mean, if you want to do the numbers, I know you were thinking about pulling up the mortgage calculator, but I think it's a good way to set the foundation to kind of give people an understanding of what, based on a purchase price, what is, or based on their mortgage payment, what they want their mortgage payment to be, what price range is that putting me in,
Mm.
and not to, I will definitely come back to your question, but I wanted to touch on so. I did some little calculations earlier, and this is based off of, um, a fair, someone with a fair credit score between 620 and 660 or somewhere in there. They are doing a 3.5% down payment, maybe going with the FHA loan, and they want their payment between, let's see, 12 and 1400. That kind of go to spot where you're saying that you're hearing a lot of people say, yeah, I want a payment of 12 to 1400. Well, guess where that puts your purchase price? That's going to put your purchase price anywhere from about 150 to maybe 175,000. So somewhat of a narrow window to get your monthly payment anywhere from about 12 to 1400. You're going to look at about anywhere between about 150, 175, maybe even 185. And of course, it's all dependent upon what the county that you're buying in, as far as property taxes, what homeowners insurance you're able to get for that home. A lot of older homes may have higher premiums for homeowners insurance because the roof life may be expired, or it could require just some other things, especially certain areas that you live in. You may have be susceptible to wind and hail damage if you live out here on the coast. So those things drive up your mortgage payment. Um, but yeah, I mean, just to start there, letting people know that yeah, if you're looking for that 1,200, 1,400, $1,300 payment, you're going to be shopping in a price point um, at between like 150 and 180, somewhere up in there.
Cool fact, Gavin. You mentioned this. I say fact, but this is from what I have heard, and also I used to before I got into real estate, I was in insurance industry. Um, a lot of people that pay insurance on mobile homes, your insurance is a lot of times higher than someone that bought a stick built house,
Right.
because of that. They consider it higher risk property. Um, your mobile homes and also your like really older homes, or like specialty. They call them specialty homes. Okay, those homes, and I found that to be interesting, that it was people that might have a, let's just say, like a single wide mobile home, but they were paying the same amount of insurance to someone that might have a, I don't know,
A four or $500,000 home.
yeah, exactly. And I was like, man, the insurance premiums are higher for those properties
Mm-hmm.
than it is for your stick built houses. So just a quick little tip to anybody out there thinking about purchasing a mobile home, compared to a stick built house. So
Mm-hmm.
yeah.
Yeah. That's a good point. So I am gonna, before we move off of the topic of larger down payments and things like that, so that you can kind of control how much you're financing. One of the cool things that I really do love that we have on our um,
What's
website
that?
is we have a mortgage calculator, and so I am going to share my screen with you fun people here, if it works. We're gonna try it out. It works.
Oh snap!
All right, I'm gonna take this little banner off so that it doesn't block our calculator here. There we go. All right. So we're going to really talk about just the mortgage payment in general, just so people can really get a realistic idea of what their mortgage payment is. So I kind of started off, and if anybody wants, one thing I would always strongly encourage people to do, especially when you're shopping. I mean, it's fine to ask your mortgage lender. We have no problem. You can even asking your realtor, hey, can you tell me what my payment would be at this? But sometimes it may be late at night if you can't get to us. Go to our website, Google a mortgage calculator. You can plug these numbers in and kind of play around with it as you're trying to figure out your budget, right?
Mhm.
So I put in here a home price of 150,000. I did the regular 3.5% down because most first-time home buyers typically do an FHA loan, but there is an option to play around with conventional VA or USDA. But just for this particular purposes, we're just going to do an FHA loan. Right now, rates are toggling around 6.5%. I did put this in Orangeburg, South Carolina, because you ain't gonna find 150,000 in Charleston or Summerville, but you will find it in Orangeburg.
You sure
So you
will.
can put your zip code in, and it kind of tell you. So it tells you that on a 30-year mortgage, at 150,000, 3.5% down, 6.5% rate, that estimated payment is at $1,233. So that's a little over $1,200, and so that's not bad. But I think the challenge comes is not that you can't get this particular mortgage payment. It's just really figuring out, how do I find a property that's at 150,000 or less, right? And
Mm-hmm.
so when you go to a person like Wilmot, who is the real estate agent, you're going to put that information with an MLS, do a search, right, and trying to find a batch of properties. Now, based on your experience, Wilmot, and in this particular area in Orangeburg, do you typically see? I know you said sometimes when you get to that price, they may not be more turnkey or not, but what do you typically see in that price point? Are they kind of fairly still decent properties that you can find around that?
You find more of your 3 bed, 1 baths, three bed,
Okay,
one
just one
half
bathroom.
baths. You find, I mean, I just recently sold one that it was renovated, 3 1,
Okay.
new roof on it, uh, redone all the way on the inside. But those are harder sales a lot of times because people want the 3 bed, 2 baths. They
Hmm.
got a family, they got kids, they don't want to have to share a bathroom with the kids and
Mhm.
everything. So you're looking at your 2 bed, 2 baths, might be a little lower, but yeah, typically 3 bed, 1 bath homes are going to sell for around that price point in Orangeburg.
So if a person is looking for more 3 bedroom, 2 baths, then what price point would you probably say that's
You got
that's probably in?
you got to jump up probably another 15, yeah, to find a decent one. The one that hasn't been
Let's say
that.
175. You think 175 would do it?
Oh yeah, 175. I get you in one. You know what I'm saying?
Oh, you heard
You,
it. He said he'll
hey,
get you in one.
I get you a 3 2. I can get you a 3 2 for that
So,
price
but
point.
look what happened though. Jumping up to 175 from 150, going up $25,000. That took that payment from 1233 to 1422. So that's almost an additional. Are you willing to pay an additional 200, almost $200 a month to get that extra bathroom? Right.
Well, let's stay right there. Let's talk about that
Mhm.
extra $200 a month. Like some people might be like, "Hey, 200." You know what I'm saying? $200 a month.
There you go.
Mindset. So let's talk about $200 and what that looks like. Either can I save it or
Mhm.
can I make it?
Oh, I like that.
Can I
I like that.
save it from, hey, maybe I need to sacrifice. And I always bring this example. My client, I don't know if she watching, but she know who I'm talking about when I say the name TJ Maxx, right? Man, if I stay out of TJ Maxx one time, I'm gonna be all right. One time a month, that's my 200. Or it might be saying, man, instead of me eating out that many times, I got the money, I just gotta save it. Or you can say, man, I'm gonna get on my grind. I'm gonna DoorDash, I'm gonna do
There you
whatever.
go.
I'm gonna work a couple extra, overtime hours to get my extra two, so I can buy my house. You gotta look at what you really want and say, hey man, this is something that's going to set me and my family up for, I don't know, the next how many years or whatever. So
Mhm.
something I really want people, is $200 holding you back from really setting up a legacy for your family. So yeah.
Ooh, I love that. That was good. That was some good stuff there. So that's great. So I just wanted to kind of give that example so people could see realistically where that mortgage payment lies. So just to kind of recap what we talked about so we don't run out of time, because this is such a great topic. If you're wanting to figure out how to lower your mortgage payment, first step is to think about how much more can you put down. I mean, I know a lot of times a lot of people want zero down, no money down, very little down. There's nothing wrong with that, but you have to also understand the more you finance, the higher your payment. So if
Mm.
you're wanting to try to find ways, which is the purpose of this video, to lower your payment, putting more money down helps you to lower your payment. The second one we're going to go to is let's talk about the terms, right? The term of your mortgage. That right there plays a key part in your mortgage as well. I know some lenders, and sometimes we can't really do it here. Our max term is typically 30 years, but there is some lenders that can stretch that mortgage a little longer. They might can do 35 or 40 years or whatever. The longer the term you do, typically the lower your payment is.
Mhm.
Um, did you want something you want to add there?
No, no, okay.
Yeah. And then sometimes even potentially looking at an adjustable rate mortgage. I know we don't talk about those too much because they're just kind of becoming a little bit more popular now because rates are a little bit higher, but don't necessarily rule them out. Adjustable rate mortgages are still pretty good mortgages to have. You just have to understand the terms of the mortgage so that you can kind of plan accordingly. We had an adjustable rate mortgage on the second house that we bought, and so it served us just fine. You'll typically find a lot lower rates on those programs, and it's generally very good. Um, Next, we're going to go to shop around for interest rates, right? A lot of people think that they shouldn't shop for interest rates because I think the more they have lenders pull their credit or something like that, they feel like, oh, it's going to make my score drop, and I shouldn't do it. But what do y'all think? I don't think that that's a bad thing for a person to shop around.
Yeah, no, I mean, it's no different from anything else, guys. I mean, sometimes you want to get the best deal that you can. I mean, it's not always in all aspects. Sometimes you can go somewhere, and as long as they have what you want in the your budget or the price range you was hoping to spend, sometimes you're just fine with that. You don't have to go anywhere further. If I want to buy a $300,000 house and my expectation is to pay a $2,200 mortgage, and the lender is able to give me that, I may be fine. I don't necessarily feel that I need to go shop around because my expectation has been met, or my need has been met, what I was expecting. But it's good when you have when you see that, you know what, you have a different expectation of something, and okay, this, I'm hearing that, I'm seeing posts and things out there that rates are this, or I'm hearing that, I can get a 4.99 over here. Why the person that I'm speaking to over here is only able to give me a 6.5? Well, what's the difference? So that's the importance of shopping around, when that 4.99 can make or break the home that you want to qualify for. And again, when there's a difference of a gap that big, there's something specific to that 4.99 as opposed to someone else only offering 6.5%. So you have to find out those things to dissect and figure out, well, what's the big difference? But the key to that is shopping around and asking those pertinent questions, whether hey, what's the best rate I can get out here based on my profile? What do I qualify for? So it's a good thing to shop around.
Y'all brought up a good question. Our client asked me this the other day. They were a little hesitant to allow a different mortgage company to pull their credit.
Mm-hmm.
Can y'all explain, like, I believe there's a window of time
Yeah.
for shopping for mortgages, and how does that affect someone's credit when they're shopping around?
Okay.
I think that there's such a huge, huge, and honestly, I don't know where it came from, but somehow I think when a certain I call it like a negative connotation on something that has kind of been put out there. And you know how
Mm,
you ever played that game? You tell somebody something and you pass it around the circle, and
mm,
by the time it gets
mm,
back to the person, it done got changed up so many times. I think that's
mhm,
what happened with the whole pull my credit, my scores are going to drop thing. So a lot of people take that phrase, well, I don't want a lot of lenders pulling my credit because they are going to make my credit score go down. And that's it's not true. So one,
mm,
if you understand the makeup of how your credit scores are calculated, you would see that one, credit scores inquiries are only 10% of your score.
Mm-hmm.
Two, mortgage lending falls in a special category. And when mortgage lenders pull your credit, you have a 30-day window to mortgage shop because the CFPB, which are the people in the high up White House people who make all these rules, they found that it's not fair to steer people into one type of financing. And so
mm,
to avoid discrimination and just different types of rules that can be unfavorable to people, they encourage people to shop. So, because of that, they have created this 30-day window where a mortgage lender can pull your credit and it not be counted as an additional hard hit. So, I think
mm,
where the misconception comes in is when a mortgage lender pull your credit, depending on the lender, because all lenders aren't created equal, some lenders can do hard pulls, some lenders can do soft pulls.
mm,
And so if that lender did a hard pull, the very first lender who pulled your credit did that, then that is your initial hit on your credit. But if another lenders come back and they do additional hard pulls, then it won't show up. You may still see the inquiry, but it won't have
mm,
any impact on the scores. Any other lender that pulls that credit within that 30-day window will still get the same exact score. There won't be any hits to your points or anything like that to show that you have, decreased or you have, a hit to the credit. I think where the misconception comes is if you let a lender pull your credit and that's a hard hit, but then you go to the store and they say, hey, I can give you 20% off if you open this credit card. Now you have a different type of inquiry hitting your credit. And then if you
Mm-hmm.
go to the car dealership and you're trying to buy a car and they want to run you through a zillion different lenders to see can they get you the better rate, then you have a different type of hit. So it depends on the type of inquiry it is and also the timing of that inquiry. And it's not the same because there's probably, I think we're up to 34, 35 different variations of your credit score. And
mm,
each type of lender pull a different variance of your credit. And so I tell people that even if, put all things aside, if you believe this myth to be your truth, if a mortgage lender pull your credit and your credit drops by 5 points, going from a going from a 640 to a 635, it truly makes no difference when it's time to qualify for a mortgage.
mm,
And so
mm.
I try to explain that to people that let that lender pull your credit because you're not going to get a different rate. You're still going to get the same rate whether your score was a 640 or 635. You're still going
Mm-hmm.
to get the rate if your score was an 800 versus a 720 because there's tiers to the rate. And so
Mhm,
understanding the different tiers of your credit, which will then kind of go into the tiers of your rate, you're not really doing anything. And so I think sometimes because there's a lot of fear, and I don't know where it comes from, but I know we have definitely seen a lot of people are just truly afraid to face the unknown. I don't think they want to face the music when it comes to where their credit score is, and I don't think they want to face the music when it comes to where they really stand when it comes to buying a house. And so trying to get that information, there's a lot of intimidation there, and people try to find whatever excuse to be like, well, no, I don't want it done. Because at the end of the day, whatever the credit score is, whether it's good or bad, we can still help you. The answer
yeah,
will never be no. It may just be not right now. So let
mm,
us let us at least give you the tools that you need or get the plan in place so that we can help you figure that out. And you're not trying to figure it out on your own.
absolutely. I encourage a lot of my clients before they, say, man, I need to work on my credit. I need to do this. I was like, man, let a lender look at it first.
Yeah.
I don't want you to just go to the repair guy and let them try to fix it. I'd rather the lender look at it first. They will advise, and you take it from there.
Mm-hmm.
And I just like the fact that we got that cleared up about that because I do get that question. I don't know, man. I don't want nobody hitting my credit too much. You know what I'm saying? Hey, bro, just go ahead, let them take a look at it. I guarantee you, if you right there on the edge, bro, if you right there, I don't think that's going to deter you from getting a house, bro. So like, that's why I try to go ahead and send them you guys, and let y'all take a look at it. So
Mhm. Well, good stuff. I mean, I know we didn't hit every single thing, guys, but I mean, I think we definitely gave some good information today and hit on some. Uh, we debunked some unknown myths
mhm.
about credit check, pulling credit and hard inquiries, and then also giving people a better understanding of mortgage payments and where that coincides with price points of purchasing. So guys, if you like this video and you continue to enjoy our Teach Me Tuesday sessions, definitely drop a like on all our social media platforms. You can always reach us. You can reach me in any social media platform, email, phone number. It's all in profile. So guys, just don't hesitate. Same for my colleagues here.
Yep. Same here. Reach me, call me, text me. Be more than happy to serve you. And if you need any information pertaining to real estate sales, market data, I can provide that for you. If you need a CMA on your home to see what it's worth, please feel free. I offer free um, CMAs to my clients, or people that's just interested in what their home might be worth. So
I absolutely love it. And same here, guys. If you guys ever have any questions or if there's any topic that we have not discussed yet that you definitely want us to talk about it, definitely let us know. Send us a message on Facebook, reach out to us directly. Our phone and email are all in our profiles, and we are more than happy to help. We will see you guys next week, same time. Until then, you guys have a wonderful week.
deuce.